So everything started at the end of 2014. The 2014, the first part of the year was pretty good, and unexpectedly we saw a slowdown in the back end of 2014 for the US selling season in the US, and after that for the Chinese New Year, beginning of 15 in China. And as a consequence, things started to slow down and created a little bit of an overhang in supply of rough and polished in the marketplace. Together with some liquidity concern coming from the banks in the middle of 2015, we created by around June, July 2015 a little bit of a perfect storm. Overstock, liquidity, and all of that pushed the trade to enter into some distress selling. Price of polish started to come down, and there was a little bit of a spiral of moving all the market down. And the second part of 2015 was clearly a perfect storm, with a big fall in sales after a first half which was quite decent. So a year in two phases, H1 decent with a problem growing, and the second half a perfect storm hitting mostly the midstream of the diamond industry, with a lot of action which had to be put in place. First of all, we started to cut production in April at the Debswana board, and at the same time we decided to cut production within our own mine, mostly in Venetia, in South Africa. And we had a second round of cut in the summer, in Q3, in Debswana and in the other mines also of De Beers. All in all, we reduced the production by 12%. The guidance for the year was 32 million carat when we entered the year in 2015, and gradually we brought it down to 29 million carat, and the final figure is just below 29 million carat, has been stable in terms of forecasting for the last 3-4 months of the year in 2015. So a big cut, and we demonstrated at that time that production to demand is working. We saw the demand being a little bit shaky, we started to cut. We saw the perfect storm building up, and we cut further, and at the end it was the right response to the market. I just wanted to focus on the two parts of the year. The first semester was not that bad. There was still demand. We knew that there was some building up of stock, but we thought at that point in time that it could be managed. It was without the liquidity problem and the distress selling which occurred by the end of Q2. So the result for H1 was a decent result. The big problem, the perfect storm, hit us in the second semester of 2015. As a result of it, the sales dropped by 51% year over year, H2 to H2. But thanks to the enormous work the team did together, and we started to work on cost cutting and efficiency very early in the year. We started to work on it in March and April. Thanks to all the good work the team has done everywhere in all the parts of the business, we were at the end in H2 with a drop in sales of 51%, but in a break-even position. We only lost $3 million with a drop of 51% of sales. I think that's a tremendous achievement for De Beers, and it's also a testimony of the very, very good work which has been done all around the business to cut cost, to improve efficiency, and to make sure that despite this terrible condition, the perfect storm, we were not hit, and we will still contribute the maximum we could do to the Anglo-American bottom line. If we look at FOREVERMARK, FOREVERMARK has enjoyed big success, big growth everywhere. We are now in 1,700 doors all around the world, big growth everywhere. Despite the fact that FOREVERMARK was impacted by the overstock problem which was hitting the world because of not such a good selling season in the US, a slowdown in the growth of the business in China, despite that, we still sold a lot. The FOREVERMARK diamond sales increased by double-digit number when at the same time the stock was going down. So still a lot of success, Stock is down, the sales momentum is up, and I think we are moving in 2016 with a much better momentum. Once again, in terms of total recordable cases, LTI, we have been improving year over year, and we have been improving versus budget, which was already a tough improvement versus the year before. So the results are good. And I'm not saying exceptional, because we still have some way to go. Exceptional is zero, and we're not at zero. So first of all, to support and improve performance in 16, you have to close 15 on the right note, because it's not because you go from the 31st of December to the 1st that suddenly everything is going to change. The team has been working very, very efficiently on the mining side, on the midstream side, downstream side, to prepare 16. And I have already been talking about all the action we put in place in terms of cutting production, in terms of cutting cost, boosting the demand at the retail level, so that by the back end of 15, the stock was at a normal level, or at least much closer to a normal level, enabling a normal pattern of business to resume. So these were the enablers from 15 to 16. I think that most of these boxes have been ticked, and we are in a much better position to start 16 and look at 16 as a new cycle with a rebound for a better result. It is still very fragile, and we need to ensure a consolidation of the recovery in the next 2 quarters. And if by the end of quarter 2 the demand is still okay as it is today, the stock is balanced between supply and demand, then we can look at the 3rd and 4th quarter leading to the selling season with much more optimism. But for the time being, we are very cautious, because we know that the recovery is there, but it is very fragile.